Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's research video, again, we're going to be diving into some topics that we've discussed in previous video breakdowns, proving to you all that financial institutions, large banks, and organizations are for a fact involved in the digital asset space. The mainstream media does not want you to see this information. They're trying to distract individuals. Let's jump into the video compilation. If you all enjoy these videos, do us a favor, smash that thumbs up button, subscribe to the platform, always keeping you in the loop with information that the mainstream media is never going to show you all, bringing these things to light to keep you guys engaged and keep you all forward looking in this digital asset space. So as you all remember, back on February 22nd, 2024, JP Morgan, the manipulation is insane, where they went on to say retail investors were likely behind the crypto market rally in February. JP Morgan says, right? This isn't coming from me. This is coming directly from them. We already know Jamie Dimon's perspective on Bitcoin that they publicly make, available to retail individuals watching the mainstream news. Okay, so we won't get into that. Now, check this out. This is from Watcher Guru, posted just today. March 2nd, 2024, this wallet has purchased an average of 100 Bitcoin per day, people, since November 2022. Do you really think worth $3.1 billion retail investors are doing this?
Into that conversation
yes.
later on.
One question on top of this: when we now saw Bitcoin surging from $25,000 to more than $40,000 in the last couple of weeks, who do you think has driven this development?
Yeah, I think it's been mainly driven by the faster moving traditional investors now. So I don't think that there is a big in the uptick from 15 or from 17 to the place where we're standing right now. It was not the usual retail investor, because the interested retail investor has been flowing into the system in the last two bull cycles, and the next big flow of retail money in the system will probably come when big banks will be announcing their integrations, because that is
I think it's been like 1 or 2 billion that's flown in today. So I would call that like a probably top 3 ETF launch, and it just gives you a proxy of how much demand is out there. And if you've ever bought large amounts of cryptocurrency, like we've done a couple of times, like $200-300 million buys of various cryptos, and what's really obvious to you is that the books are actually very thin. Like 99% of the volume that's transacting, whatever, like the 20, 30, $40 billion a day of volume, is just market makers trading against each other. There's no like, less of it is just real people actually buying. If you have 25 to 50 billion of inflows, which is what today's annualization would be of the inflows, Bitcoin's going to be multiple hundreds of thousands of dollars. And
no, okay. That's why you got to wake up and you're reading fundamentals like this. No, banks are here, ladies and gentlemen. Institutions are here. Now, regardless of whether that money and that capital is going to flow into altcoins, I'm not here to debate that. I'm just here to show you all that they are trying to distract you all. We are in the now. The now is, you got to understand. Remember, previous video breakdowns, we've talked about the infrastructure, the foundation, the legal regulatory clarity was not set in place, but that is all in the next couple of months / years about to completely change. And these financial institutions are trying to get ahead of the curve.
And the reason why is it's very easy for a regulator to come out and say crypto is illegal, ban it, right? But they haven't done that. What you have found is regulators across the world have been trying to navigate and figure out what is the right way to put in place frameworks and how do you operate within these frameworks. Right now, it's almost like a race. And the reason why is, well, regulators themselves recognize. They recognize that we are an economy on ourselves. We bring with us everything from jobs, GDP growth. And because of that, the regulator wants to put in place that right framework. 2 years ago, Singapore and Asia was probably ahead of the curve. Hong Kong's caught up. Japan recently are looking at changing their regulations. Korea also has something currently with regards to the retail markets as well. And I think as institutional players ourselves, where we become, and it's very different from traditional finance, where within crypto, unfortunately, or fortunately actually, how you look at it, trading shops like ours, market makers, we are integral, and it is up to us to set the gold standard, be it regulatory and compliance and the right way of doing business. So because of that, the way we approach it, especially within firms such as GSR and how we do it, is we engage regulators. We sit down at these roundtables with the HKMA. We sit down talking to the MAS. We talk to the guys in Dubai, the guys in London. And the reason why is, well, they don't claim to know it all anyway. They want our input. So putting together something like that, you kind of feel there is light at the end of the tunnel. And yes, will there be a situation of whack-a-mole over the next couple of months? For sure. But you have to see where regulation is now compared to where it was 6 months ago, compared to where it was 5 years ago. And we are progressively much further ahead. And it's only going to get faster from here, you feel.
Okay, they don't want to miss out on this massive opportunity. Again, you need to wake up. You need to make sure you're doing your research, okay? So let me show you even further proof that large financial institutions are actively interested in digital assets, cryptocurrency specifically, and are heavily involved.
Got 10 seconds. Tell us the pitch.
Ernst & Young have just published a report on the demand side looking at high net worth individuals, family offices, and fund managers, and asked them whether they'd be interested in investing this year and next year in digital assets. The vast majority said they are. The vast majority said they are.
Behind the scenes information that's never going to make it to the mainstream. This is an event via the ISDA, okay? April 16th to the 18th, we know already, I don't want to beat a dead horse, but Ripple joined the ISDA back in 2023, I believe in August, if I'm not mistaken. I might not have the date exactly correct, but yes, last year in 2023, they joined the ISDA. That's going to play an important role later on. Here we see April 16th through the 18th, 2024 in Tokyo, okay? We have this event set to come out, and look at the agenda. Okay, here's the agenda right here. You guys can go check this information out yourselves. It says ISD Accounting Symposium, Digital Assets, ESG, DRM, Hedge Accounting, and more. This event will give market participants in derivatives markets an update on the accounting issues that will have an impact due to accounting and regulatory changes. Particular consideration will be given to hot topics such as digital assets, including cryptocurrencies. Says it right there on the website, cryptocurrencies. There's so many people out there that'll be like, oh, they're just talking about digital assets. No, it specifically says cryptocurrencies. Okay, and look at the organizations and the individual participants attending this freaking event. It is absolutely monumental. This screenshot right here alone is trillions of dollars. We got JP Morgan, right? JP Morgan, the gentleman, Jamie Dimon, telling you all that they're not interested in cryptocurrencies, is attending an ISDA event in 2024 where they're discussing and talking about cryptocurrencies. People, okay, come on now, wake up.
Is that I called JP Morgan. That's Jamie Dimon. JP Morgan crypto is a pet rock. It's a Ponzi scheme.
Not my cup of tea.
Yeah, we should shut it down. If I was the government, we would shut it down. These are direct quotes from Jamie Dimon, JP Morgan. And I asked the private banker there, can I put IBIT, which is the BlackRock shares, in my personal account? And they got back to me and said they're accepting orders on a non-solicited basis. So if you call there and you ask them to buy it for you, they will. I don't think people understand how seismic that is. I don't think people understand the opportunity. Last point, I worked on Wall Street. I guess I'm technically still on Wall Street for 35 years. These products are sold. They're not bought. There will be legions of people all over Wall Street selling these products, FAs, brokers, consultants. There'll be tactical asset allocation portfolio managers instructed by CEOs, put 1 or 2% into a Bitcoin ETF and a $5-6 billion portfolio. BlackRock has a $2 trillion multi-strat. Imagine a 1 or 2% allocation into their IBIT shares, just to give you the magnitude of what's about to happen.
All right. It's time that we are in an information era where if you're lacking education or information, it is nobody's fault but your own. You got to tap in, people. Wow. Okay. Here we see BNB Paribas, BlackRock, Bank of America, right? BNY Mellon, HSBC, DBS, right? We see UBS, Societe Generale, whom we know is a Ripple partner, HSBC, whom we know is a Ripple partner, right? If we head over here, you can just ask these general questions. Yes, HSBC is a Ripple partner. Ripple acquired Medico, a company that works with banking giant HSBC. You see right here, Societe Generale. Yes, a Ripple partner. Societe Generale, subsidiary. SG Forge has partnered with Medico to expand its institutional digital asset capabilities. Okay, so we're seeing connections. We know Ripple joined the ISDA. We now see that Ripple partners are attending this event. It's always interconnected in some way, shape, or form. Now, if we scroll right down here, we can see the statistics of the individual market participants attending this event. You can see right here, it says type of members, okay? Banks are highlighted in red. Look at the other numbers. Banks have the highest percentage of individual attendees attending this event. You can see right here, highlighted in red, 31% of participants attending this event, where they're going to be talking about digital assets and cryptocurrencies, are going to be banks. Okay, so just again, take that into consideration. I find that very interesting given the mainstream narrative surrounding digital assets and crypto. Now, moving on. This just took place. Financial Stability Board, this was posted around 15 hours ago. Last week, we held a workshop on crypto asset regulation implementation. So again, just further solidifying that regulations behind the scenes, again, no mainstream media attention was driven to this, are happening behind the scenes. Okay, remember that is one of the main catalysts that needs to be set up and put in place in order for these large financial institutions attending these events to onboard comfortably into this space.
Trying to lead the way here, and I agree with what Stefan was saying. So you have a lot of players that have interest in this space, but to do something here, they need the regulatory clarity. Okay, maybe not the specifics, but at least the big picture. You need to have some comfort to make sure that you don't get into something and then you need to adjust. So I think that you have a number of players that will end up entering this market once Mika is live.
Okay, so here we can see this is very interesting. Remember this gentleman's name, okay, Tobias Adrian, how he's been on panel discussions and previous video breakdowns with Brad Garlinghouse in the background, right? Okay, the changing landscape of crypto assets, considerations of regulatory and supervisor authorities. Remember, I'm not here to shill anything. I'm here to show you guys that this information is readily available to each and every single person. These connections are easily attainable through your own fingertips. It says, my congratulations to the Office Comptroller of Currency for hosting a fantastic event yesterday. You would think that this would get some mainstream attention, right? Where they were talking about the Financial Stability Board, providing another important, it says right here, important crypto working group meeting, right? So they're talking about cryptocurrencies for global regulatory frameworks for crypto asset activities. This got no mainstream media attention. This is positive for the space. Ongoing developments surrounding regulatory clarity. Now, remember I said to remember this gentleman's name, Tobias Adrian. Well, if we go over here to this fundamental PDF, we scroll up to the top of this, okay? FinTech Notes. This was put out last year, 2023, Trust, Bridges, and Money Flows. I know that we're beating a dead horse here. We've showed this document before, but who was this prepared by? Tobias Adrian, right? You see his name right there, the number one person preparing this whole entire PDF. March 2023 is when this came out. Well, if we scroll right down here, remember in previous video breakdowns, what have we talked about, ladies and gentlemen? Okay, head over to our YouTube, click on the infrastructure playlist that we have. There's 11 videos in this playlist. Go through and watch them to familiarize yourself with what we've been talking about and trying to show you all how deeply embedded Ripple is with building out this new financial infrastructure. We are not making this up, okay? This is directly from the IMF. Here it says, another question, let me zoom in, is whether the public or private sectors should be or will be involved. While the most efficient or socially desirable setup may be debated, the private sector is rapidly building this infrastructure.
Look, Ripple at its core is a blockchain infrastructure company serving enterprises. We started with payments and financial institutions. We've moved into custody, a lot of overlap with those same financial institutions. But we're going to expand with that same thematic of infrastructure, enterprise-based. It served us well.
Okay. Again, watch the infrastructure playlist. This literally just confirms what we've literally been trying to show you guys. And it says right here, 3 models arise, a private settlement asset and marketplace such as Ripple's XRP. Okay. They are helping build this new financial infrastructure. It's coming right here directly from the IMF. It says the private sector is rapidly building this infrastructure. Okay. This is directly, again, put together by Tobias Adrian, whom we know sit on panel discussions with Brad Garlinghouse in the past, just recently discussed and talked about regulatory clarity surrounding crypto asset activities, right? No mainstream media attention. Again, they don't want you all involved. They know what's happening. The IMF knows about Ripple and XRP. If you think that they don't for 1 second, then you're delusional at the end of the day. And again, I'm not trying to attack anybody. It's just this research needs to be done on your behalf so you can see, zooming out long term, what is about to take place. If you miss out on these opportunities, looking back 3, 4, 5 years from now, you will have nobody to blame but yourself. Now is the opportune moment to educate, to see that for a fact, articles like this is false. This should be taken off the internet. This is bad information. Retail investors involved? Yeah, buying up $3.1 billion worth of Bitcoin since 2022. Come on now, people. Retail doesn't have that type of money, right? Who does? These large financial organizations who are attending events, talking and discussing about cryptocurrencies. You guys catch my drift, right? Okay. Hopefully you guys can see what's happening. Now, further confirmation. This is directly from the Financial Stability Board. If you're here so far, again, smash that thumbs up button. We are in an attempt to wake people up, to show them the devil's in the details, to draft you all towards doing this type of research. This came out from the chair of the Financial Stability Board, Klaus Knott. So again, this isn't coming from me. This isn't me telling you all institutions are involved, the institutions are here. This is coming from the chair of the Financial Stability Board, people. Okay, let's go look at this gentleman's experience, right? You can see right here, Klaus Knott, his experience. He is the governor, president, Deutsche Central Bank, professional in monetary and banking, director and deputy treasurer general, division director at Deutsche Central Bank, right? It goes on. He was an economist for the International Monetary Fund. So he has some pretty serious credentials. I'd say he's a pretty systemically important individual, right? You should probably listen to what he says. Well, again, no mainstream media attention. This just dropped 29th February 2024. Zero, absolutely zero mainstream media coverage. And he just delivered a speech, right, at this conference that just took place, the ASIFMA annual conference, okay? And here you can see what he says. The crypto ecosystem itself also continues to evolve rapidly in different directions. It is not just some retail investors that are dipping their toes into crypto. This is directly from the chair of the FSB. Yet here you see, I'm physically proving to you all that these articles are lies. This is disgusting, right? Where you see, this is what makes the mainstream. Meanwhile, behind the scenes, whales are buying up Bitcoin, driving price higher, while systemically important individuals like the chair of the FSB are telling you all that it's not retail buying up crypto. It's large institutional parties. Here it says, large institutional parties continue to show serious interest in crypto assets and its underlying technologies. In its role as a guardian of the global financial stability, the FSB has been closely monitoring crypto asset markets since 2018. We have been working hard to address crypto's potential systemic implications. We do recognize the possible benefits of this innovation. So here is the chair of the Financial Stability Board telling you all that there are benefits of this technological transformation, okay? Please, people, wake up. You got to do research. So smash that thumbs up button, subscribe to the platform, showing you guys that it's not just retail now that is involved in this space. It is financial institutions, literally right here. And you can go and you can see who and what financial institutions and how many participants via in terms of percentages are attending events where they're talking and discussing about digital assets and cryptocurrencies. You can see what institutions. Go back and check at how vast and how large their assets under management are, how much capital they manage on a daily, weekly, monthly, and annual basis, and see for yourselves how much money is about to flood into this freaking space once they get the regulatory green light. So anyways, do us a favor again, smash that thumbs up button, subscribe to the platform, always attempting to keep you guys in the loop with what's really happening behind the scenes, showing you all information that's never going to make the mainstream. Do us a favor, smash that thumbs up button, subscribe. We do appreciate the love and the support, and I will see you all in the next video breakdown.